The Statistics Office in Nigeria is reporting that the price of goods and services measured by the Consumer Price Index increased by 17.75% in June 2021 when compared to May 2021. This is 0.05 percentage points higher than the rates recorded in May of this year, month on month. This is the third consecutive month the inflation rate is dropping this year in Nigeria. The composite food index rose by 21.83% in June 2021 compared to 22.28% in May. This implies that food prices continue to rise in June, but at a slightly slower rate than it did in May. The rise in the food index was driven by increases in the prices of bread, cereals, potatoes, yam, and other tubers as well. On a month-on-month basis, the food sub-index increased by 1.11% in June 2021, up by 0.06% points from 1.05% recorded in May. Now today on Business Edge, we'll be looking at where Nigeria currently stands with its inflation rate. We'll also touch base with the bond auction scheduled for today. I'm Tolulokwe Adileru Balogun. This is Business Edge. Joining me on today's Business Edge is the Managing Director of Trust Bank Capital Management Limited, Azeez Lawal. Azeez, good morning and welcome to Business Edge. Thank you so much for joining me.
Yeah, good morning, Tolu. Thank you for having me. Good morning.
So let's start by looking at the numbers. So Nigeria's inflation rate dropped further in the month of June to 17.75% from 17.93% recorded in May. This is the third consecutive decline in headline inflation. So what do we think is driving what is now possibly a trend? Would you even call it a trend because it's been 3 months? But what do you think is driving this inflationary situation we're seeing?
Yeah, well, thank you for the question. Yeah, it is what we call at our hand base effect. In context, if you remember, like the prices started rising last year at the end of April, because I mean January to March, the world was in normal mode. It was until end of March when the lockdown was announced. So that frustrated supply of goods, and we saw the impact from April where prices started rising. So now compare. So when the fall that we noticed this year, it started in April this year. When you compare it to last year, when prices had already risen, so the impact of rising prices here was, as a result, subdued. So it's now a case of us comparing higher prices this year to higher prices last year. So as a result, you have a lower inflation. Unlike when we had March this year, higher prices compared to lower prices March last year, because there was no lockdown effect. So again, what is responsible for the decline in inflation levels is base effects arising from higher prices last year.
Okay. So one of the important parts for many Nigerians is that food inflation continues to be at very, very high rates at this point. Food inflation is currently at 21.83% for June compared to 22.28% for May. And so while we see a very small, insignificant decline in those two numbers, for the average Nigerian on the streets, we're still seeing very, very high food prices. Shouldn't there be some change in food prices if we've seen a small movement in the inflation rate as well? Because you want to say it's plus or minus. This should be mathematics, is it not, Azeez?
I mean, that's a very realistic question, right? And it's a very strong question. It's still the same impact, really. It's still the same impact. For the CPI basket, the food items constitute about 70% of it. So if base effect is affecting the CPI itself, it's the same thing for food inflation. Again, we all know that price of food items, they are still rising. Yeah. They are still rising. But we are comparing a rising price to a price that had already risen in April last year. So as a result, you have a lower impact. That is a base effect. unlike if it were March or February last year where prices were low. And so it's more of still the basic. It is painful that prices in the market are rising, but yet they are saying the economists are saying that inflation has been subdued, is coming down.
Yeah.
It is because inflation works with a base, and the base we are talking about now is last year. And this time last year, prices are risen already. So again, but the good thing is that a lot of the bottlenecks that made prices surge last year, to a reasonable extent, they've been subdued. So the rise we are seeing this year, I mean, compared to what we had before now, I mean, is much better. So and going into July as well, we also expect that inflation will take the same path of decline.
Okay, yes, because I'm going to definitely ask about your own prediction. In terms of this impact on the economy, we've seen headline inflation, in fact, actually go up just a bit. Again, these are minute changes in the trend we've seen so far. But when it comes to a genuine impact on the economy, how Nigerians feel it in the market, how they feel it in their pockets and in their wallets, what impact do you think that increase, even as minute as it may look in terms of the number movement, could have on Nigeria's economy, particularly with the headline inflation?
You mean the impact of declining inflation?
No, the impact of the increased headline inflation. It went to 1.06% in June from 1.01% that happened in May. Of course, as you said, month on month, this may link back to the same thing you're referring to. But in a larger scale, what's the impact on the economy?
I mean, typically, the impact of an increase in inflation level basically is what it reduces the disposable income available to people, and it basically increases the misery and poverty index. In context, I mean, typically we all go to the market and like, I took 5,000 naira to the market. When did I exhaust this money?
Yeah.
I mean, typically, because of the impact of inflation, if you factor in the percentage increase, though you have 5,000 naira in your pocket, but in actual fact, in real terms, what you have in your pocket is around 4,000 naira. So what a jump in inflation or an increase in inflation causes is that it reduces the value of disposable income available to individuals, as a result, increasing misery and poverty index.
Do you think enough is being done by those who are the financial managers of Nigeria to address this? Because someone might want to take a bit of credit for a 3-month trend of decline, but it's still not significant enough for many Nigerians to actively say that I'm seeing a change in the economy. Is enough being done to address these issues?
Enough.
So, okay, Aziz, what I'm getting from you is enough is different than is anything being done. So 2 questions then. Is anything being done, and whatever is being done, is it enough?
So, I mean, what is majorly, especially food inflation, what is majorly responsible for that now is just the fact that we still have bottlenecks around supply arising from insecurity,
yes,
and agitation in different forms all over the country. So, I mean, talking about enough in terms of insecurity, is government doing enough in terms of insecurity? I mean, apparently we all know that, I mean, it's not enough. Maybe until we'll start seeing the impact of the latest addition to the toys of the Nigerian military in terms of the the supply of Tucano jets. So as far as insecurity is concerned, to ease bottlenecks around supply of food, for now, enough has not been done. Then in terms of policies, especially from the CBN, CBN to a large extent, we've seen the impact of their efforts and their policies. So from the angle of the CBN, we can say enough is being done. But there's little monetary policy can impact if there's no physical policy to back it up or to support it in the same regard. So I mean 50-50 really. we are seeing enough sensitivity to the needs of the people and the yearnings of the people from the CBN, but it's not being matched by fiscal policies.
Okay, so not being
so we
matched.
can say 50-50 really.
Okay, so action is still an issue there. Let me quickly touch base with this before we go for a break. So at the time that Nigeria's borders were closed in 2019, before the closure of Nigeria's land borders in 2019, inflation peaked at about 11.02%. And you can compare that with the current figure of 17.75%. While this is a situation where the borders now have actually reopened and you're supposed to be able to do some level of trade, even though those time periods have different factors that may have been affecting them, is there anything you can infer from the difference in that inflation rate at that time versus now, with certain I guess we'd say with certain things in play?
Yeah, if I got a question clearly, you are saying that the fact that the borders have been opened now, has it impacted inflation in the sense that has it reduced the impact or slowed down inflation? Yes. So I mean, when the border, the opening of the border was announced December 2020 thereabouts, we have seen, because the thing is that what we have now, maybe we could be around, maybe, because as of November, analysts were projecting that by March, by half year, I mean this year, we could be around 30%. So if you look at it in that context, the fact that the borders have now been open, it has slowed down the rise in inflation. So the impact of border reopening is that it slowed down, it subdued the rise in inflation, regardless of the fact that even though before the borders were closed, it was 11%, and now it's currently doing is way above that presently. But you would have to look at it from the context of what if we did not open that border. And as a matter of fact, significantly, the reopening of the border has actually subdued inflation level. Don't forget that even before the lockdown started, Nigeria's inflation was rising.
Yes.
January, February, March last year, it was rising solely as a result of closure of border. So when lockdown came in, it only came to strengthen it more. And the opening of the border in December subdued the rise of inflation.
All right, Aziz, let's hold on to that. So you're using the word subdued and slowed down, but we're 3 months into a decline right now in Nigeria's inflation rates. Will that continue? Aziz will give us his projections, and then we'll also touch base with the bond auction that's happening today. A few movements on Nigeria's markets and a few things that might be keeping investors interested in Nigerian bonds. Stay with us. Aziz Lawal is still with me, and we're looking at the trend of Nigeria's inflation declining in the past 3 months. So very quickly, before we move on from here, you had touched base with it just a bit before, but do you think that we're going to continue to see this decline in the figures in the coming months? We are basically on the half-year mark for the year as it is right now. So what are your predictions for the headline, and particularly the food inflation rates as it stand, coming into what we expect in the July figures and possibly to the end of the year?
I mean, easily we'll continue to see decline, because if we look at the factors that are responsible for the increase in inflation levels over time, we are talking about the closure of the border, the impact of lockdown arising from from COVID-19, instability of the naira to a large extent. I mean, impact of lockdown is out of it. We are no more on lockdown. The borders have been opened to a reasonable extent. The naira has been stable, so easily we will see that inflation will continue to drop. I mean, we most likely will close the year at maybe around 15% levels thereabout. It's a possibility. I mean, what appears to still be a threat now is insecurity and agitations across different regions in the country. But we still expect that, I mean, going forward, inflation will continue to decline.
All right. Aziz, let's touch base on something else. So the primary bond auction, which was meant for July 21st, is actually going to happen today, a few days ahead of schedule. Do you think the change in dates might affect how this particular auction performs?
I mean, not necessarily. Not necessarily. I mean, it is expected. The calendar, there's a calendar, so the fact that they brought it back by 2 days thereabout will really not affect anything. Don't forget that I mean, the first, let me put some context around this bond auction. I mean, the first half of the year, we've seen the government raise over 1.1 trillion from the bond market.
Yeah,
they are still going to raise about the same amount in the second half. And we saw the calendar earlier, a couple of weeks back. So when the circular came out last week, I mean, though it said 21, when it was brought back to 19, it was not a surprise, really. So we still expect that, I mean, the subscription levels will be very, very high. The last auction in June was oversubscribed by over 150%.
Yes.
We still expect that kind of subscription level at today's auction. Last week, yields rose marginally last week. Majorly, quite a number of market players were camping their liquidity against today's auction. So we expect that to be oversubscribed.
Okay, let me put some numbers to that. So the auction for last month was actually oversubscribed by 178%, which was about 267.48 billion naira. What does this tell us about investors' appetite for Nigerian bonds? What do you think we're seeing?
Yes, I mean, the yields to a reasonable extent, they are still juicy, and don't forget that the main players in this market are PFAs, and PFAs they have a lot of liquidity in their chests. So I mean, we'll continue to see these oversubscription levels. Actually, it's not like it's a retail market. It's not a retail market.
Yeah,
it's a market for PFAs, and this PFA they always have money to subscribe to these bonds.
All right, let's talk about one new development very quickly before I let you go. So just a few days, we saw the launch of Nigeria's first ever corporate Sukuk bond. And there have been a lot of conversations around Sukuk financing in Nigeria in recent years. The Family Homes Funds Limited issued a 7-year, 10 billion naira bond, and it's the first Sukuk to be registered by SEC as well as the Financial Regulatory Advisory Council of Experts. It's been certified. So there's a 7-year, 13% bond due in 2028, the first corporate Sukuk in Nigeria. What do you think about this development?
Yeah, it's a good development. And I mean, the market is ripe for that, and we'll continue to see more Sukuks in the coming months. And still talking about the PFAs, one of the developments in the market as far as PFA is concerned is that we now have a Fund 6, and Fund 6 is meant for Fund 6 contributors are those that have opted that, okay, fine, I want you to invest my pension contribution in non-interest instruments. And as we speak in the system, there's a serious debt of non-interest instruments. So the contributions that we have presently that can meet non-interest in terms of funds that are available is over 1 trillion. So I mean, you just mentioned 10 billion now, telling you that the market is still very, very huge. So it's a good development. It's a welcome development. I will still see more of that in the coming months.
All right, I think that's an area we're going to have to touch base with you to widen it and get a better understanding of what Sukuk financing can do, not just for Nigeria, but also other countries as well. Aziz Lawal, thank you so much for joining me on today's Business Edge.
Yeah, thanks for having me, Tolu. Thank you.
All right, fantastic. All right, that is, of course, the conversation we're going to have, primarily looking at Nigeria's inflation figures on a third-month decline. Aziz is telling us he believes that decline will continue and Nigeria could end the year around that 15% inflation mark. But before we give you the few stories we're keeping our eyes on, this is the Tiger Wit Weekly Forecast. I'll be right back after this. And let's wrap things up with a few stories we're keeping our eyes on. And we start here in Nigeria, where the government says the country is on track on the global demand for cleaner energy. Minister of State for Petroleum Resources, Timothy Silva, said that the federal government was leaving no stone unturned to ensure that the country moved to cleaner, renewable energy, but that the steps must be gradual. OPEC Plus ministers have agreed to boost oil supply from August to cool prices, which have climbed to 2.5-year highs as the global economy recovered from the coronavirus pandemic. The group agreed, new production allocations from May 2022 after Saudi Arabia and others agreed to a request from the United Arab Emirates that had threatened the plan. Under the new agreement, the UAE will see its baseline production increase to 3.5 million barrels per day from May 2022 from today's 3.168 million barrels per day. The Central Bank of Kenya has accepted bids worth 19.2 billion Kenyan shillings out of 19.3 billion Kenyan shillings received from investors, representing an undersubscription of 80.28%. Bidders were offered government paper worth 24 billion Kenyan shillings at the weekly Treasury bills auction. The most popular debt instrument was the 182-day Treasury bills. And finally, the International Finance Corporation, which is the private sector investment arm of the World Bank, is putting in $1.2 million, about 129.8 million Kenyan shillings, in a 5-year corporate bond issued by the Tanzania Mortgage Refinance Company. Now, this boosted the firm's efforts to increase access to longer-term, affordable mortgages and housing in Tanzania. The bond, which is listed on the Dar es Salaam Stock Exchange, was oversubscribed and raised $3.8 million against a target of $3 million.